Now, for more insight into possible impending financial catastrophe and counter-crisis measures, our correspondent in Washington, Zhu Hua, spoke with the co-director of the Center for Economic and Policy Research.
After the U.S. government put forward this bailout plan, we noticed that there are mixed opinions on it, and the stock markets are not responding positively. So how would you evaluate this bailout plan, and why do you think that stock markets continue to plunge?
Almost every economist across the political spectrum that looked at that said that that was not an efficient way to recapitalize the banking system and take care of some of the problems. And of course it didn't do very much, and it's not going to do anything probably for at least a few weeks. It takes time. I think the stock markets are also reacting to the global economic slowdown as well. They're starting to realize that, first of all, that the United States has a real recession, not just a problem in the financial sector, but the actual economy is going to go into recession. In other words, even if you were able to resolve miraculously all of the financial problems tomorrow, the United States would still have a recession, because we had an $8 trillion housing bubble that has not even fully burst yet. It's only about 60% deflated. And that causes a recession when you have a big bubble like that and it bursts.
So what are the other tools for the United States government to do to fix this problem?
Well, they are starting to do the other things. It's funny, when they tried to get the plan through Congress, they pretended like this was the only thing they had, but they didn't have any other plan B. But in fact, you can see now they're doing quite a number of things. The Federal Reserve decided to buy commercial paper of both financial and non-financial corporations. The Treasury Department is now talking about putting money, that is injecting capital directly into the banks, like the UK government did. That was the plan that most economists supported, as a way of helping the banks, but not taking the taxpayer money and paying for assets that were junk, or paying more than they're worth. So they're starting that. They're talking about guaranteeing all the deposits in the banking system. So, and they're going to have to do even more. We have insolvent banks. The government's going to have to take them over, some of them. They're going to have to sell off their assets. It's going to be a long process. But there are many things that the government can do in order to maintain the functioning of the financial system, and I think they're going to do them more.
Generally, how would you describe the current state of the U.S. economy, and where do you think this financial crisis will take U.S. economy in the short term or in a long run?
Yeah, well, that's the problem. Again, you have I guess we could separate two things. We have a financial crisis, and that's a result of all these banks and financial institutions that have bad assets. They were over-leveraged. They had a terrible deregulation and lack of regulation in the U.S. banking system. And so, as a result, we have institutions that are insolvent, and that's going to have to be worked out. But then as a result of that, you have a freeze of certain types of lending, and that hurts the real economy too. But separate from that, you also have the problem in the real economy, which has just begun, really. I mean, you haven't had massive unemployment yet. You've lost maybe 800,000 jobs since the beginning of the year, so it's starting to get worse. But we haven't really had the impact of that bursting housing bubble on the real economy yet. So the economy does look bad. I think we're going to have a serious recession here, and probably a big world slowdown as well. Maybe not so much in China, because China can, they have their own economic policies, and it's a big economy, and they can do different things, like they did in the Asian crisis. But this economy in the U.S., the European economies, most of the rich countries are headed for a slowdown. And I think the U.S. in some sense is the worst, because we had our housing bubble was very big, and consumers were very dependent on that bubble in borrowing against their homes. And so we have a big big bubble bursting here. And the future of this economy and the world economy is going to depend on whether the governments in the U.S., Europe, Japan, and elsewhere pursue the right policies.